what's happening in the marketplace, trying to be consistent, let you guys know what's going on out there, what you could potentially take advantage of, give you some ideas of ways that you could trade the market, which, as I've said, since I've started this little project here at Make Money from Your Laptop, and I've said for the years prior to that, it's all about consistency. There isn't any special silver bullet that's going to just solve everything and help you win every trade. The way to success in the markets is through a consistent application of a consistent trading method that gives you positive expectancy, and that's it. Well, that's not really it. There's mindset and money management that come into it. We've talked a little bit about money management in the past. I haven't talked a lot about mindset. I've mentioned it quite a few times this week, but I haven't given you any ideas about things you can do to help build that proper mindset. So let's run through the numbers here on my chart, and then I'll get through that pretty quickly, and then we can pop over and just talk for a minute kind of about mindset, right? So let's start over here. Let's start over here. Yeah. Let's go over here and we'll talk about what's happening with the futures market. So just kind of getting things going over here. I begin with futures, and we'll talk about Forex, and then we'll go and have a look at what's happening in the crypto world. So starting with the futures market over on E-minis, we are in a downward trend. So the S&P, if we look at the 4-hour bias, it's down. 4-hour bias in the S&P is short. It's been very short since the end of February. Had a little bit of a run up as the stimulus package was announced, and I think there was some euphoria maybe around that, in my mind irrational. We've got a lot of things coming out this week. The real numbers hit the road. So we've got unemployment that's hitting here coming up. Well, in April we're going to have companies posting earnings from March. That'll be eye-opening. We've got manufacturing reports, car sales reports, housing reports, all sorts of things are coming out. And when you start seeing real numbers behind it, I think the market will continue to react. However, we don't always base what we're trading based on what we think is going to happen. That wouldn't be a consistent and viable plan. Well, I guess it'd be consistent that you're always just basing on what you think is going to happen, but there isn't any real math or real structure behind that. So we trade based on well, I shouldn't say there's no definitives, right? The suggested method would be to base on something that's quantifiable, right? Base your trading on something that's quantifiable. How do you do that? Well, in order to create something that's quantifiable, you have to have a consistent approach. So, you can use indicators, right? And there's thousands of different indicators that are out there. I try to keep it as simple as possible. I look at support or resistance, just drawing lines on the chart where where prices stopped, stalled, reversed, right? And then, I look at what's happening with moving averages in order to give me that bias, right? I've got a longer term moving average and a shorter term moving average, and as they cross on different time frames, that's creating kind of what the bias of the market is based on that time frame. So, looking at a 4-hour time frame here, we've got a 4-hour, looking at the at the moving average, which is this. What I've got on here basically is the red is a 100 exponential moving average based on 100 periods back, and the green is a weighted moving average based on the last 20 periods. You can use any periods that you want. The point of it is find something that's consistent and that's meaningful to you. At the end of the day, most indicators that you put on a chart are fairly why you pick that indicator, why you pick those settings. I mean, there's some math behind it, but also at some level it's arbitrary, because all it's really doing is providing you with a filter, and that filter is something that you're going to utilize to find the consistency. So it's just simply a filter. You can set this to almost anything as long as you're consistent with the process of how you look at it. It doesn't really matter. So anyway, moving away from that, looking at the 4-hour bias, we're in a downward bias. The red is above the green, so it's telling me the bias is down. We go over to a 30-minute, and we've still got a downward bias, although we have kind of hit a little bit of a channel here. Coming into the regular trading hours, looks like we're struggling right around 2,500 over here. So if we're in a downward bias, what we'd look to do would be to look for potential selling opportunities. So if price floats up to key areas, 2,500, 2,525, we would look to potentially sell off of that, or the flip side of it is wait for breakouts and sell as price breaks below a certain area. But if your bias is down, you want to be able to look for selling opportunities. That's trading with the trend. You don't have to trade with the trend. You could look for counter trend trades, but the whole gist is try to keep things as simple as possible and trade in a method or in a manner that gives you some level of consistency. So if we're looking at a 4-hour bias and a 30-minute bias and saying they're both down, then in theory we'd want to continue with that direction and say, well, if the 4 hours bias is to sell and the 30-minute bias is to sell, then I'm going to look for selling opportunities as the day unfolds with whatever plan fits your personality best. Bounces, I think, are a little tougher than breakouts because, again, as we talked about in previous live sessions like this, in order to play a bounce, you have to be willing to do something opposite of what that current candle says. So if we're going to play a bounce, we would have to be selling into a big green candle. If we're going to play a breakout, that's a little easier sometimes psychologically because you've got confirmation of that movement. It doesn't mean either of them is going to win. It's just psychologically which one can you stick to and execute the same way. Last week we talked a little bit about utilizing a combination of the bounce and the break by looking at what your bias is and then drilling down to a shorter time frame and then trading it based on highs or lows of previous candles on that. And you can go back to other days and look at those lessons if you're curious about what that is if you haven't seen them in the past. So anyway, right now 2,500, big number for us. Down here 2,450, another big number for us. We'll see where the day goes. Even here, 75. If we look at where price stopped and struggled kind of throughout the off trading hours yesterday, even during regular trading hours yesterday, came 2475 was a pretty big number on that 30-minute, and we can see how it's popped around there as well. So you could almost look at potentially setting up your break area here between 2475 and 2500 as top levels and bottom levels. So just some ideas for you there. Looking at oil on the 30-minute, we have hit a bit of a long bias now on the 4-hour. We're still definitely down. We've talked about 20 for a few days now. Seems to certainly be the bottom edge. It's dipped into the teens here and there, but 20 has definitely been that bottom edge for oil for now. Does it mean it can't go below 20? Absolutely not. Oil is going to go as low as it needs to go. Don't get caught up with people saying 20 is the bottom, it can't go any lower, because anybody that's calling the bottom has been doing that since oil was at 30 and oil was at 40 and oil was at 50. So be careful calling the bottoms. Certainly when you hit big numbers like this, whole numbers, price does tend to stop, stall, play around those big whole numbers. $20 oil is definitely something else, and it certainly, 22 prior to that, and 20 has been this really held up the last couple of days as the bottom edge. Right now, your 30-minute and your 4-hour bias is mixed. So we've talked about that before as well. What do you do with that? Well, if your trading plan says that my 30-minute bias needs to be the same direction as my 4-hour bias, then you simply don't trade. You wait. It's okay to not trade. That's a big psychological thing that's tough for a lot of people, is sitting on their hands. Well, man, they're mixed, but look at this really strong upward trend on oil. I feel like I'm missing out if I don't take an action. Okay, sure, but are you being consistent? If you've got a trading plan that allows you to take an action. But if you don't, then don't do anything, right? The 4-hour and the 30-minute are mixed. Don't do anything. Wait for something to happen. Maybe that means that you're going to miss out on a few points as oil floats up, and it takes time for the 4-hour to confirm a new upward bias. That's okay. Would you rather be consistent and have something that you can bank on over the long term, or would you rather be right today? One gives you long-term expectancy, one gives you a crapshoot for the day. So think it through. I can just say from experience, the biggest negative impact to my trading account is when I do things that are outside of what the trading plan says. And that's the psychological side of it, right? We can sit here all day long and talk about what the charts are saying and what the bias is and what we should be doing, but if we're not executing that consistently on our side, then none of that matters. And that's where a lot of folks get into trouble. They look at these systems, they look at these trading methods, they look at tools and indicators and things and go, that's going to change my life. But then they don't take consistent action on it. And it doesn't change their life. And then they go on to the next thing and they blame the system. And they go on to the next thing and they blame that system. They go on to the next thing, they blame that system or tool without ever taking responsibility for their personal actions. And that's what it usually comes down to. It's our personal actions, right? We have to be responsible for what we're doing. And the mindset is a big piece of that, which we're going to get to in just a second. So let me run through the rest of this. Gold, maybe flip back over here. Gold is in 30-minute is down on gold. 4-hour is actually down as well on gold. As I've mentioned before, I have a really hard time selling gold. If things aren't where you want to be, then certainly don't trade it. Gold's having a really nice run up right now prior to regular trading hours. Maybe look at breakout opportunities there. Popping over to the foreign exchange side of things, let's bring up this fella over here, see what's going on. We've got some movement for the day so far. Pound has been really kind of leading the race, if you will, since we got started about 16 minutes ago into the foreign exchange regular trading hours for the U.S. session. So U.S. session opened at 8 a.m. U.S. Eastern time for Forex. It opened the other instruments don't open until the stock market opens in regular trading hours at 9:30 U.S. Eastern. So anyway, we've got a couple things going. We've got good movement with the pound, good movement with the USD, good movement with the yen. Weak currencies down here are the Aussie and New Zealand. So looking kind of across the board at where the opportunity is, which I've mentioned before, I have there's some issue with dragging charts across. Or even sharing my other monitor. When I share my other monitor, for some reason with this program, other things that are behind it, it tries to show everything and it all bleeds together. So suffice it to say, if you're on the Make Money From Your Laptop site and you've signed up as members, you've got access to the tools which would allow you to utilize programs, utilize the various indicators and EAs that are on there. One such indicator that I utilize in the morning is the range indicator, which allows me to see how things are moving today versus how they've been moving in over previous days, and that lets me get an idea of how impactful the moves that we're seeing here might be over the course of the remainder of the session, right? So I pulled up pound USD. These two are actually trading right with one another, so it's kind of an irrelevant chart. Let me find one that makes more sense that we can have a look at. So if we were to look at, say, the pound Aussie, the pound Aussie is over here. So pound Aussie, we got the pound, we got the Aussie. Pound is definitely our strongest currency. Aussie is our weakest currency coming into the new U.S. session. How's that looking? Well, we've moved 230 pips for the day. Average has been into the 300s lately. Yesterday was a really outsized day, 400 pips. But our 5-day, our 30-day average is 350 to 380 if we factor out some of the really extended days that were there. So is there some opportunity? There might be. This really took off and has already run quite a bit past my breakout, so I don't really have a trading opportunity there. Right now, since it's already past the breakout box I would use. If you're just trading manually, you may look at pound versus Aussie trades that you could potentially get into just utilizing the Trade Manager EA, which is in the tools section as well, which would allow you to enter a trade, and then it manages your risk for you. But looking pretty good. We've got the our volume detail is showing us that there's a bias to the buy side with this currency, at least on a 5-minute time frame. We've got a bias to the buy side on this currency pairing, and as we can see from the currency strength chart here, the pound is certainly gaining strength in relation to the Aussie and other currencies. So it's definitely a strong currency. So we look for opportunities to buy the pound against some of these other weaker currencies. The other opportunity there could potentially be the USD or the yen against the Aussie or the New Zealand. Aussie USD has moved 60 pips for the day. Average is anywhere from 150 to 100, I guess about 140 to 160-ish area. So definitely opportunity. We've only moved 63 pips. So is there opportunity for that to continue to move at least 20 pips to get us profit based on that breakout strategy? Yeah, certainly seems viable. So if the pound has been a little too volatile for you, maybe look down at some other currencies that are there and just weigh them out and see how that see if that makes sense for your specific trading style and what you're trading, how you're trading it. So some things to look at there. The real purpose behind utilizing the currency strength meter here is just to simply see which currencies are moving. There's so many currency pairings, potential currency pairings that are out there. We look at the 8 major currencies and then just see which of those 8 majors actually have activity, so that we can find the currency pairing that has the best opportunity for movement. Again, just like anything else, it doesn't mean that anything is going to happen. It doesn't guarantee that currency is going to keep moving the direction it's moving and produce a win for you. It's just simply saying, hey, these two currencies are diverging from one another. There's volatility there. There's opportunity there. Let's see if something works out if we pair those together and take that trade. Over on the let's see, where do I want to be here? Over here, quickly looking at crypto, we're still in a pretty tight channel. If we look at Ethereum, it has moved up a bit, which is counter trend. The trend is still down. The bias is still down on Ethereum. Top level here is around 140. Our bottoms have been hanging around 130. So pretty tight area here. Coming in yesterday, really we were kind of hanging 135 with that bottom of 130, 128 if you really want to go for a low. It did break out of that. It broke out long, and looks like it's pushing a little bit longer here, at least in the short term. The bias is still down though. So with the downward bias, we would for trading with that trend, we'd continue to look for potential selling opportunities until that changes. Here on Bitcoin, same thing. We are in still a downward bias until this crosses over and gives us some confirmation on the 4-hour that it's changed. We're still in a downward bias there as well, with that top being around 6,800. Now, a couple things coming up: ETH 2.0 and the halving event on Bitcoin. As we get closer and closer to that, as markets in other places begin to normalize, we could certainly see a big push back to the long side on these. But again, if we're trading with the trend and we're trading using something that identifies a specific bias and a specific filter, then we stick to that. That's the only way to be consistent, is to stick to whatever that filter is until that filter changes and gives you a different trading methodology. So with that said, let's talk a little bit. What's CrystalBot doing? I haven't talked about that in a few days. It's trying to eke back some of the losses over the last couple weeks. Back up a little bit here. Still got a long ways to go to get back to even, but it's certainly, as we see, it's got more of an accumulation strategy. So we'll see what it does as this continues to move. If we get a big push on ETH or big push on Bitcoin, really Bitcoin more than anything, we'll probably see Crystal recoup those losses more quickly. So anyway, all right. So mindset, because I am starting to get to the end of my time. I've kept you here for 20 minutes for those that are watching. So mindset, how do we work on mindset? Well, a couple ways to do it. I think first you can do some minor tweaks yourself. I've talked a lot about process. It's all about defining a process, and my process might be different from your process, and it should be. You should have your own process. You should have your own filters that you're looking at, have your own way of entering the market, look at what you're comfortable with for using profit targets or using trailing stops. And in order to get comfortable with those, you'd have to do some research over a back test of some sort. Go back 100 days and look for 100 trades or potential trades and see how things work if you utilize a trailing stop, or how things work if you utilize a fixed stop loss with a fixed take profit point, things of that nature. Which one gives you the better expectancy, which one gives you lower amounts of drawdown, which one gives you what rate of return. How comfortable are you if you lost 5 in a row or 10 in a row or 15 in a row utilizing certain strategies? You've looked through that. But once you get that down, and once you have something quantifiable, you've actually got a good data sample set, you've got something that's quantifiable that you can work with, that becomes worked into your trading plan. Document your trading plan, document your trading style, document what you're going to do, how you're going to do it, what the filters are in place that when they all fall in, when something falls through all your filters and comes out the bottom side, you say, okay, that's a trading opportunity, right? That becomes your process. Focus your success on your ability to follow that process. It's not win or loss. Because if you've done the research in advance and you've created a plan, then following the process is going to give you that expected result, or it should pretty closely match what you've come up with in advance. If you've done the work in advance and created a decent sample size, you can't go back 5 trades and go, oh, I've got it, eureka. Give yourself a good sample size, 100 trades, 150 trades, 200 trades. Take time. Just take some time and do the actual research to figure out what is your best trading style. What time frame do you want to trade? What instruments do you want to trade? What's your working capital? What hours of the day are you available? Look at all those things and create a process. Once you've got your process, just had a notification just popped up on all my computers here as well as on my phone and distracted me for a second. Once you've got your process documented, measure your success by following the process. How do you do that? Well, you can record what you're doing. So, use Camtasia or some other recording software out there. As you're entering trades, record your screen. Even though no one else watches it, subconsciously, there's that potential that someone may come across that and watch it and then question you about what you did, right? So subconsciously, you've got a recording going, which is you're being maybe a little bit more aware of what you're doing because you're being recorded. And then journal. Journaling is a really good way to look at it as well. And not really journaling as in your thoughts and your feelings, which are valid as well. How are you feeling today? What's going on today? Yada, yada, yada. But more along the lines of these filters occurred. I made this decision. This decision was in line or wasn't in line with my trading plan. And then utilizing a calendar on your desk and giving yourself, gold stars when you perform well, and then maybe a big red X or something when you don't. That physical calendar method of keeping track is very, very, very. What's the word I'm looking for? That word just flew right out of my brain. It's a great method of keeping you on track. Why can't I think of a word? It's some simple word. Anyway, happens, I guess. Need my coffee. It's a great method, though, of keeping you on track when you've got that visible starring system. A friend of mine, Todd Gaster, does mindset training. He has a method where he just wants you to keep score every day. Keep score, that you follow your methods, that you do what you're supposed to be doing. So you can start with that. Start with just, identifying your plan, really documenting it out, journaling what you're doing, recording your trades, and then keeping score using a star if you followed your trading process for every trade for the day, and then an X if you didn't. Once you start lining up multiple days of stars, you're not going to want to deviate. Your subconscious is like, oh man, it hurts more to break the cycle than it's easier for your brain to just continue doing the right thing versus having the pain of breaking that and having to give yourself a red X. But you've got to be honest with yourself. No one else does it for you. You've got to be honest with yourself in order to make that work. The next thing is, once you start a process like that, that's all great, but find a coach. Get a mindset coach. There's nothing wrong with getting a mindset coach. Todd Gaster, a friend of mine, used to live here in Dallas. He gets amazing results for his clients because he asks you to really do some deep digging and find out what you're doing, why you're doing it, how you're doing it, and then he gives you a scoring system in various parts of your life that you should look at every single day and keep score. And then, as you build up days on days on days, you don't want to deviate. You want to make sure that you're checking all the boxes of the things that you're doing so that you have that a good score, right? Now, you can always just lie to yourself, but that doesn't do you any good. It's not going to grow your account to lie to yourself, right? So that's one method. Norm Hallett, another great trading coach. Norman Hallett, disciplined trader. He and his wife have a brand new trading course out for specifically geared to traders. So, either of those two guys are amazing. Both are friends of mine. When I say friends, I truly mean not just somebody that I met online, people that I know, I like, I trust. I've sat down with them, had food, had drinks. We've talked multiple times over the years. When we see each other in the crowd, we know one another. It's not just my friend, which you hear all the time online, my friend, but it's just somebody that they knew from YouTube. These are truly people that I know and have experience with. Both are great coaches. So, use those methods to get you started, but then do look at finding a coach. And again, Todd Gaster, Norm Hallett. Todd is a great coach, kind of if you're looking for something all around. Norm's coaching is laser focused on traders. Norman's a trader. He's laser focused on traders. So anyway, that's 30 minutes just about. So I've probably rambled on longer than I need to. If you've stayed here for this long, thank you so much. I certainly do appreciate you. I do appreciate that. If you like what you're hearing, share with your friends. It doesn't cost you anything to hit the like button and the share button. Everything I'm doing here, providing content, providing training, providing ideas, helping you along, it's all for free. I don't have a course that I'm selling you. I do have tools on the website that you can purchase, but I don't have a course that I'm selling you. I want to give you the education for free because I feel like people need to know that the simple stuff can and does work, and just you don't need all the complicated strategies and things that are supposedly going to give you all this extra wins, right? You need the simple stuff that works and gives you consistency. And that's what I'm focused on here. So that's it. Have a great day. Talk to you later. Bye.